Welcome to ValueVest Daily, where we analyze best value and momentum investment opportunities.
All right, let's jump right in. You've probably seen the headlines about Palantir, ticker PLTR. The stock has been on an absolute monster run, especially after its latest earnings report just blew the doors off. So the big question on everyone's mind is this: is this an AI rocket ship you absolutely have to board right now, or is it a high-altitude valuation trap that's about to spring on unsuspecting investors? Let's break it down.
So, first things first, let's look under the hood at the fundamentals, because this crazy stock move isn't just random hype. Oh no. The reason Palantir is exploding is because the business itself is a powerhouse, posting some truly staggering numbers. It all kicked off with their latest earnings call. Wall Street was expecting a great quarter, but what Palantir delivered was, frankly, a blowout. They didn't just meet expectations, they shattered them, beating revenue estimates by a solid 8%. And that translated into a massive $475.6 million in pure net income. But that 8% beat, that's just the tip of the iceberg. Check this out. 63%. That's the company's total revenue growth compared to this time last year. For a company of this size, that kind of year-over-year expansion is just phenomenal. And believe it or not, that's not even the most jaw-dropping number from their report. Here it is. 121%. This, right here, is the number that has Wall Street buzzing. That's the year-over-year growth in their U.S. commercial revenue. And this is so important because it's being driven by their AI platform, their AIP. This proves it's not just some cool tech concept, it is a commercial juggernaut that real businesses are clamoring to get their hands on. And what happens when revenue grows like that? Well, profitability goes into hyperdrive. We're looking at a forecasted 462% increase in earnings per share for the full fiscal year. That is exactly what you want to see. It shows the business model is scaling perfectly. As the money comes in, the profits are growing even faster. So how does a company protect this kind of insane growth? It all comes down to a concept called an economic moat. You know, just like a moat around a castle, it's a deep, wide, competitive advantage that keeps the rivals out. And Palantir's moat is an absolute fortress. Here's the best way to think about it. Their software doesn't just sit on a client's computer. It becomes the company's central nervous system. It connects to everything, processes everything, and becomes absolutely essential to their operations. Once a company is running on Palantir, trying to rip it out, well, it would be like performing open heart surgery. It's so critical and so costly that it's just not going to happen. And this growth train just keeps on rolling. Demand for their AI platform is soaring. They're teaming up with heavyweights like NVIDIA to make their AI even faster, and they're landing massive deals with huge players like Boeing, not to mention major government and defense contracts across Europe. All of this is stacking up to a record total contract value of $2.76 billion. Okay, so the fundamentals are clearly rock solid. The business is firing on all cylinders. But what about the stock chart itself? What is the technical picture telling us right now? Let's switch gears and take a look. So here's a quick technical snapshot for you. As you can see, the price is in a strong uptrend, trading way above both its 50-day and 200-day moving averages. That's super bullish. But, and there's always a but, isn't there? Look at the RSI, the Relative Strength Index. It's clocking in at over 76. Anything over 70 is considered overbought. Basically, it means the stock has run up very fast, very quickly, and might be due for a little breather or a short-term pullback. So what does this mean for you? Well, it kind of depends on what kind of investor you are. A momentum trader looks at this chart, sees the strong trend and surging volume and says, let's ride this wave. But a more value-oriented investor might see that overbought RSI and say, whoa, let's be patient. Maybe we can get a better price on a dip, perhaps waiting for a pullback to a support level around 185. It's a classic case of two very different approaches to the same hot stock. You know, when things get a little tricky, it's always a good idea to see what the so-called smart money is doing. So let's see what the big institutional players are up to, because in Palantir's case, they are placing some massive bets. Just take a look at this. Nearly 54%, so more than half of the entire company, is owned by large institutions. We're talking pension funds, hedge funds, investment banks. That is a huge vote of confidence. These firms don't just throw billions of dollars around lightly. This signals a deep, deep conviction in where Palantir is headed long-term. And who exactly is doing the buying? We're talking the titans of the industry here: Vanguard,
BlackRock, even Cathie Wood's highly influential ARK Invest. They've all been adding to their positions. Get this, in just the last 12 months, there's been a net inflow of $29.5 billion from institutions into this stock. That is some serious firepower. So where do the pros on Wall Street see this going? Well, in the short term, you've got bullish firms like Wedbush putting a price target of $215 on it. But if you look further out, say 3 years down the line, some analysts believe that if Palantir keeps up this growth, the stock could push past $300, maybe even higher. All right, we've dug into the booming fundamentals. We've analyzed the hot stock chart. We've followed the smart money. Now it's time to put it all together and land this plane. Let's answer that big question from the beginning. Is PLTR a rocket ship or a valuation trap? So here it is, the final breakdown. The bull case is incredibly compelling. You have explosive, AI-driven growth that is very real. You have massive institutional backing. And you have key partnerships that are fueling future revenue. But the bear case? Well, you just can't ignore it. The valuation is sky high. A forward price-to-earnings ratio of 293? I mean, that is priced for absolute perfection. Add in that overbought chart and growing competition from rivals like Snowflake, and that's the real tug of war here. It's a classic battle between world-class growth and a top-shelf price tag. Now, just our quick and very important reminder before we wrap up, this analysis is for informational and educational purposes only. It is definitely not financial advice. Please always do your own thorough research before making any investment decisions. If you found this breakdown helpful, it would mean the world to us if you take a second to subscribe, hit that like button, and share ValueVest Daily. It really helps us continue to bring you analysis on daily opportunities before you put your hard-earned money to work. And hey, one last thing. Is there a specific stock you're watching, a ticker you want us to put under the microscope next? Let us know down in the comments. We read every single one. Thanks so much for watching.